This is CatsMeow492 again. I'm posting a quick tutorial about how I analyze markets post-closing and plan for the pre-market for the next day. So the first thing I like to do is check the futures market. The futures market typically forecast where the stock market is going to go. So on this website, this is just cnbc.com/pre-markets. If you want to go there and check out yourself. As of right now, and this could change, so don't take this to the bank. Check yourself pre-market tomorrow to figure out what you're going to do. The futures markets opened about 500 points, and now they've capitulated. The Dow is down about 254, and the S&P is down about 30. The European market has been down all day. They don't even really matter. The Chinese market has definitely run up a little bit. They were doing pretty terrible before, but it seems like they're kind of making a recovery, but nobody really knows with China because their government's full of shit, so I wouldn't take those numbers to the bank either. Anyways, like I said, the stock market typically forecasts the futures market. So what I would expect at this point is kind of a minor downtrend from the stock market. I think we will probably waddle back and forth around existing supports before settling maybe slightly down tomorrow. The next step is to check the news to figure out what the fuck is going on with the world, and I have been looking at the news all day, so none of this shit is new to me. Sanders and Biden canceled their rallies due to coronavirus, so coronavirus is definitely more and more in the public awareness, and people are taking it more and more seriously. I think the biggest one here is that Trump pitched a 0% payroll tax for the rest of the year. And I think that was specifically for the travel and hotel industry and all those tourism-centered industries. So if you're wondering why there was this huge bull run up and like stocks that should be doing garbage like Carnival Cruise Line and Norwegian Cruise Lines and Wynn and MGM and Caesars, it probably has a lot to do with this 0% payroll tax pitch. Let's see. The next thing I like to do is plot my support and resistances so I have an idea of where the market is going to go once it starts moving, because I honestly don't think anyone knows. Looking at the futures market, I think you probably have a 60-40 against the market right now. So there's probably a 60% chance of finishing downwards, 40% chance of swinging upwards. Nothing decisive, basically a coin flip. So what I have here are what I've labeled low significance support resistances and high significance support resistances. The low significant ones are modeled using the moving average for 50 periods and the moving average for 200 periods. I call these low significance because although they're important to watch and the market does normally react to these points slightly, the high volume support resistances are far more significant. So you can see there's my MA50, there's my MA200, there's the two supports I've plotted. The more important ones are these ones that I've marked with the dark red. The less important ones are in the pink. So you can see the dark ones I've modeled based on periods of particularly high volume, and I've gone top bar for safety. I don't want to go bottom bar because that's a little bit too optimistic when you're holding puts for a take profit, and it's a little bit too optimistic for an entry when you want to buy a call. So you can see this period of really high volume, I plotted a support resistance right on top of the bar, and then this period of high volume, I plotted another support resistance right on top of the bar. And if you watch my last analysis, you could see that that tracked really well. I actually timed my exit only $3 difference from the market low of SPY today. So I was within 0.5% of the best possible exit of my put. But you can see the market crashed down here, and as soon as it hit this support, it started to bounce right back up. So based on this lackadaisy trend we're seeing from the futures market, I'm feeling like we're just going to trend sideways for a while. So probably no exciting swings up or swings down, but I cannot predict that with any certainty. I have not seen the futures market close yet. If you're wondering what to do with the position you currently have, we can take a look at a heat map I've generated over here. That'll give you an idea of the probability that you will find an exit in at a price you need to get out of that position. These light areas over here represent the most probable outcomes here. So you can see down, like the most probable swing down is, it's not really that big. So there's not a lot of space there for a put right now. Your swing up, we do have a little room here. There's been quite a bit of volume up in this area, as shown by the heat map extending up this way. So if you're looking to get out, let's say above 299, you don't necessarily have bad odds yet, but I don't think the odds swing either way significantly to justify holding a position needlessly. So if I were you, I'd just make sure I had good stops, something at like 282 to exit that put, just so if it starts trending downward, you can just get the fuck out. But right now, or if it starts trending upward, you can just get the fuck out of your put. And then the inverse is true for a call, except if you're holding a call, you do have a little bit more leeway in this heat map. As you can see, there's probably about 65% distribution of volume in the upper level here, maybe 35 in the downward level. So you have much better odds of getting out of a call in time. Just don't get greedy, because I don't think it's going to swing either way significantly. But like I said, we have to watch the markets tomorrow to find out. Something huge could be announced. The Feds could cut the rate again or some other bullshit. So you just always got to be careful and on top of it with the stock market. Anyways, I hope this was helpful. If you have any other questions, just let me know and I will try to answer them in the most concise way possible. If you're still using Robinhood, get out of that shit. There's a referral link down below. Webull is what I use. You can use all the same charts in all the same ways I do. It would be insane not to switch at this point, especially because they're on, like, what, their fourth fucking blackout. Also, if you want to follow me on Twitter or anything, all those links are down below. Thanks for watching.